Good afternoon and welcome to the Noble Capital Markets Virtual Equity Conference. I'm Joe Gomes, Managing Director and Senior Analyst at Noble Capital. Today I have the pleasure of introducing Schwazze, a company for which I currently provide research coverage. Following the presentation, we will have some time for Q&A. Feel free to submit questions using the Submit a Question function. With us today from Schwazze is Justin Dye, Chairman of the company. With that, I'm going to turn it over to Justin. Justin, the floor is yours.
Great. Thank you, Joe. And welcome, everyone. We appreciate you spending time with Schwazze. We are a regionally focused company. We operate in Colorado and New Mexico, and principally a retail company with a wholesale business. We're probably one of the best companies that you've never heard of. We have a premier operating team. Our states where we operate are improving from a backdrop standpoint. The competitive dynamics are getting better in our favor. We're on the precipice of major federal regulation changes that will be extremely beneficial to the cannabis sector, including us, that will drive free cash flow some multiple of where it has been. In our case, it'll be 4 to 5 times more free cash flow by the fact that we won't be paying 280E taxes, which is a clause in the tax code that prevents companies from writing off their SG&A expenses if the product is deemed federally illegal. And we believe that rescheduling is a very big catalyst for the sector. And then also the industry, when compared to other industries and products and retail, with growth rates of high double digits, as well as our company that operates with north of 30% EBITDA margins, we trade at a discount to other sectors. And then once again, we are undervalued compared to other cannabis companies in our sector. So we're a great value play with a great team that continues to build momentum and growth. So our safe harbor, if you're reading that, I'll let you get your eyes checked. So as I said, we're a vertically integrated cannabis company with a regional focus. If you look at the history of Schwazze, we were founded in 2016, principally as a consulting company. Our firm, Dye Capital, invested equity in the form of a PIPE in 2019 to create a powerhouse consolidation play in Colorado to roll up the Colorado cannabis industry. And since we started with zero recurring revenue and the company was losing money when we came in, and we have hired a very good management team, built a very solid strategy of going deep and really trying to be the market leader in our markets and be retail focused and taking care of the consumer. And what we've been able to do is we've been able to grow to 63 stores within the last 4 years and driving sales to north of 170 million with 31% EBITDA margin. So the business has done very well over the last several years. Today, if you look at it, breaking down the company, 62 dispensaries. We did have a closure. Colorado stores 27, New Mexico 35. We do have cultivation that provides part of our needs at retail, but we also source flower, bud, and other products from industry participants to really give our shoppers a full set of assortment to be able to shop our stores. So 5 facilities in cultivation. We have an outdoor grow and we have several indoor grows, 4 of those. Manufacturing, we have 4 facilities where we manufacture pre-rolls, we manufacture vapes, we also manufacture gummies in New Mexico with the Wana brand. We have 2 consumer product brands, Purple Bees and Everyday Weed, where we sell our flower under, vapes, and also pre-rolls. And those have been doing quite well. We also sell those to third parties as well from a wholesale perspective. Headquartered in Denver, Colorado. We operate in Colorado, New Mexico. That is our focus, and we are focused on going deep in those markets. If you look at cannabis as a backdrop, growth sector, we expect the business to be $100 billion by 2030. If you look at usage, 19% of the adult population have used cannabis within the last year, and 11% of the adult population is using cannabis on a monthly basis. And that continues to grow and taking share from beer, wine, and alcohol. Our differentiated strategy versus going to as many states as possible, we have focused our capital, focused our management attention, focused neighborhood by neighborhood to find locations where we can have the best stores with the best people. And we invest heavily in our technology and people to run a very lean operation, which when you compare our SG&A versus other participants in the industry, we're clearly a leader. We're driving our house brands, as I mentioned, on the shelf. So the more shelf space you have, the more opportunity you have to sell your own products with a little better margin in that. And we continue to grow that portfolio. And we've invested heavily in data and analytics. We have a data lake, data warehouse where our operators have at their fingertips on an hourly basis the key data they need to be running the business. And we do a lot of work on consumer shopping behaviors. Next slide. Going deep in retail, it's a virtuous cycle. The larger you get, the better cost structure you have, the more dollars you have to invest in new real estate, invest in capabilities, training your people. The larger you get, the more leverage you get in terms of driving out your costs, your supply chain, and you get opportunities when a new CPG company is bringing a new product to market. Typically, they will come to the largest operator, and we'll have an opportunity to be a first to market with those new products, which gives us a competitive advantage. From a footprint standpoint, you can look at the total addressable market. Colorado is $1.5 billion. New Mexico is approximately 550. We believe that's going to grow to 800 to 900. And we think that comes from some population growth, but also switching the black market, gray market to the legal market. And New Mexico is about a third of the market there. And they're right next to each other. We can share resources. We can share people. We have the ability to share best practices. And that has been part of the strategy. If you look at how we compare, we have the most depth from a number of store standpoint within our states. We average 31 stores per state, and you can see the rest of the industry is somewhat less than that. And that really speaks to our focus on driving market share and knowing the markets that we're in and creating a competitive advantage there. And I would say there is a tight correlation in the retail business with market share and profitability and your ability to provide consumers with a very good value as well as assortment at the store. So it gives you a competitive advantage. From a profitability standpoint, we maintain we're still one of, if not one of the most profitable companies in the industry in two of the toughest markets, which I think really speaks volumes to our team that we have in place and our playbook, as well as our technology that we've invested in. We've ranged from a gross profit standpoint in the mid to high 50s. And then also from a SG&A perspective, you can see we've continued to lower that where we're at one of the industry best at 5%. So we run the company very lean and we pay close attention to expenses. And we continue to drive productivity in terms of efficiencies using technology, simplifying the business, continue to get better and invest in processes. From a brand standpoint, our footprint really is, our retail footprint is really the foundation that allows us to have shelf space, paves the way for our ability to source not only great products from other companies and partner with them and have them partner with us to provide promotional funds where we can lower the price in different promotions to stimulate demand and drive trial with the consumer. We capture rich customer data, so we really try to understand our shopper and the consumer and how we can continue to give them what they want today as well as what they need in the future. And that creates the opportunity for us to create product brands, our own product brands that we can bring to the shelf that provides a great value to the shopper and really allows us to, as we look at trends with consumers, allows us to create products that meet those demands and keeps it within our house. And we also leverage great partnerships with Lowell Farms. They are our partner of choice. We are their manufacturing partner and go-to-market partner in Colorado, New Mexico. We manufacture for Wana in New Mexico as well, where we have a relationship and we have infused, and we continue to build these partnerships as we go. So measure and manage in the retail business. It's very important that you continue to watch the market and competition. We have technology where we watch pricing and indexing by location to make sure that we are priced at the right place to continue to attract our shopper and giving them great value. Promotional effectiveness, our ability to measure when we try different promotions, whether it be a buy one, get one free, or whether it be buy this and get 50% off. We can look at the data and see what promotions are most effective and give that feedback back to our supplier partners as we try to drive more units and satisfy our customer. Store allocation tool, very important. This is an inventory rich business. I think we do an exceptional job of managing inventory and making sure we have the right inventory at the right time at the right place. And also in terms of labor scheduling and optimization, making sure we have the right people there covering the right hours when we are the busiest. And that allows you to manage overtime expenses, allows you to make sure you're providing great customer service as you go. And those are key to winning in our markets. Financial performance, you can see, trailing 12 months, we're about $175 million business, gross profit about 52%. Adjusted EBITDA came down. We took a pretty big investment in the first quarter. We lowered prices substantially in December, particularly in New Mexico, to address, we wanted to really work on selling more pounds of flour as well as selling more units. And we took that in the first quarter, and you'll see that the rest of the year where that's going to tick up and normalize pretty close to where we've been historically, which is in the low 30s of EBITDA. So very good company and very profitable. If you look at our year-over-year growth, 94%, 352%, 47% the last 3 years. And then if you look at 23, we grew about 8%. And that was really, we were digesting a number of acquisitions last year and really trying to optimize and drive supply chain synergies. So we didn't have a lot of new store openings last year or acquisitions, but I think you'll continue to see us be aggressive with looking at new store locations. We've won several new licenses here recently in our states, and particularly in Colorado. So we're looking at opening new stores and haven't provided the details around those locations yet, but they're coming. The rescheduling impact, this is very powerful. So by cannabis moving, DEA has approved moving cannabis from a Schedule 1 to a Schedule 3, meaning the cannabis has a medicinal value, medical use, and we're waiting for that to go through the comment period that I believe is public comment period will wrap up in mid-July. And then we believe the rules will be forthcoming, and we're hopeful that this gets signed by President Biden before the election, or at least before the end of the year. And this has a very large impact on our business. You can see before 280, while we were not able to deduct SG&A expenses because cannabis is a Schedule One drug, we generated free cash flow of 4.3 last year. With 280E eliminated, that would have been about 19 million. So you can see that our cash flow goes to 4x, which allows our ability to pay down debt, makes us a stronger, better company. We'll be able to attract cheaper forms of capital. So very big deal for us and the industry, and we haven't seen the full effect of that. But with regards to, we do think rescheduling is going to happen. We feel like we have a very good position around 280E. Future, where are we headed? We're going to continue to expand in our markets. There's still a number of geographies within the two states where we operate, where we would like locations. We're going to continue to build out our wholesale business. The team is doing a great job of selling our products to other retailers, and we see massive growth there. Loyalty engagement. This is something that we're going to continue to work on. Really developing a program to understand the voice of our customer and shopper, as well as providing benefits to them to stay within our system. And there's some really cool innovation going on there that we're working on. Also, we're working on new innovation around retail concepts. So we're working on A/B testing some new concepts that offer a different assortment, a different experience, different value, different convenience to the shopper. And we're excited to launch a couple of those, and we'll test and measure those like all great retailers will. We're going to continue to expand our real estate footprint in terms of new stores. We continue to work on our supply chain and wrenching out costs, whether it be LED light innovation, which helps lower your electrical costs, to vertical integration, which allows us to keep profits in-house, to item strain optimization, which allows us to produce at a lower, more efficient cost for those strains that we're selling through to retail. And this is a recurring. We have productivity targets every year, which the team has done a good job of hitting. So we think there'll be another $10 million plus of value creation from an EBITDA perspective as we work on these future initiatives. So coming back to what are the highlights, we have a differentiated strategy. We have a premier operating team with a demonstrated track record. They're very well regarded in the industry. That's not just us saying that. They've done a really good job at driving outsized performance in two of the most challenging markets, New Mexico and Colorado. In the market, we have a proven growth strategy through new stores, product innovation, as well as M&A. And we're very good on the M&A side of being able to due diligence, get those companies integrated, driving out synergies, buying better, driving more sales at retail and on the wholesale side. And this is a very good company that we think we're on the precipice of some very major things happening from an operating perspective. New Mexico is improving from an operating standpoint. There is the regulatory environment. It's getting tougher there on illegal operators, switching from misdemeanor to felonies with selling illegal product. We're seeing a lot of crackdown, a lot of stores closing there. We're seeing less stores opening and more stores closing, which will benefit us. And we see a lot of tailwind in New Mexico coming our way, and a lot of the price action and some of the things that we've invested in are really paying dividends and selling more units and increasing our market share in that market. In Colorado, we have been on the bottom in terms of pricing. If you look at AMR, it has trended down into the low 600 per pound, and we're seeing that marching up, and we've seen that for the last several quarters. And we believe that the glut of supply that was created post-COVID is starting to dry up, which is putting more efficiency and having people behave more normally from a pricing perspective, which benefits us from sales and drives more gross profit dollars. And obviously, rescheduling is going to unlock a lot of value for this industry and will certainly benefit. So, we're a great company. Our stock price has not performed well, as the sector has not performed well. But we think this has still got the potential, and we believe the timing is becoming right where we could really see a lot of future upside and value creation for shareholders. So with that, I'll turn it back. I'll turn it back to Joe.
Thank you, Justin. Great presentation. So I'm going to start off the Q&A. I'm going to combine question I had with some of the questions that have come in from the audience. And basically, they want to say, the two states, Colorado, New Mexico, how many stores are there overall in both of those states? What is Schwazze's goal in terms of number of stores for both of those states? And if you hit that goal, what kind of market share of the revenue from each of those states would that equate to roughly?
Yeah, great. That's a great question. So if you look at where Colorado is, it has north of 620 adult use dispensaries. I don't have the exact number as of this month, but it's very close to that number. And then if you look at New Mexico has about the same number, with a lot less population. So you can see the ramp up in competition when you really kind of peel the onion back and you look at the competitors that opened in New Mexico. A number of those are not paying their excise and sales taxes, so they're behind, and we're seeing store closures, particularly around us. For instance, Albuquerque's had 100 stores open with over the last year, and we're seeing a number of those stores starting to go away. So the operating environment's getting better. Where do I think we should be? I believe we could be at the 50 store mark when we look at the opportunity in New Mexico. And in Colorado, we're still targeting roughly 100 stores, where we think when you map out the different geographies and you look at population, you look at where where the opportunities are, we believe that's 100. And then from a store or from a market share perspective, our view is we could be 20 to 25% is sort of the next step for us. And that's what our kind of target is. Could we get higher than that? Sure. But it'll take some time.
Okay. And then just on the illicit market, if you were to sit there and say, I know Colorado has historically done a pretty good job of weeding out, so to speak, the illicit market.
Yeah.
But what would be your impression as to how big the illicit market still is in Colorado and in New Mexico?
Joe, that is a great question. Obviously, there's not hard data against that, so it's really kind of interpolating what we see and how we kind of look at it by area and geography. Colorado is certainly less than New Mexico. New Mexico, the illegal market is rampant, with lack of enforcement and regulation. We're truing that up. Regulations are getting tighter. They're funding police enforcement now. And I believe the CCD down there has hired, north of 10 more people to go out and do inspections, which I know they've been closing stores for having illegal product and not getting their products tested. So I think that's better obviously safer for the shopper and consumer. I would say New Mexico, it's probably north of 50%. And you'll see that in some other states as well. And it could be larger than that when you look at psychoactive hemp that people are selling illegally. So that's another competitor, a substitute versus illegal cannabis coming over from whether it be Mexico or from some of the neighboring states where there's excess supply that we see a lot of. So that environment's getting better. And for someone who operates by the rules and we have our products tested, and playing by the books and paying our sales taxes, we think that's going to improve quite a bit. And I think Colorado's done a pretty good job. They've outlawed psychoactive hemp and are starting to really enforce it. And I think that's good for everybody.
Okay, thanks for that. And pardon me, you talked a little about the potential of 280E taxes going away if the drug is rescheduled. So obviously, in the past, you've been paying taxes at a higher rate. Would that give you the ability to potentially recoup some of those taxes that have been paid previously?
It would. It would. We are active. We're actively engaged with a one of the premier law firms in the country, who is providing, a written opinion around where we stand with 280E and the various reasons why it doesn't apply to us. So we would, on the heels of that, we would certainly expect to file for a refund, much like what TrueLeaf has. TrueLeaf's had a windfall in terms of their taxes coming back to them in the form of a refund, and then going forward, our tax burden will be substantially less. So that is great news for the industry and creates a ton more cash flow coming out of this. We've been generating cash flow, which is very challenging with all the taxes. So that's a nod to our team, but this is a very big seismic shift in terms of the cash flow generation of this business, which, if you look at it on a DCF model basis, creates a lot more value for the equity holders.
Exactly. And just staying along the regulatory per second, safer banking. Have you heard anything more about that being pulled through and becoming, the law of the land, so to speak? And how does that impact Schwazze?
Well, I'll start with what it is. To the extent we had safer banking or safe banking, I guess they're calling it safer. I saw today it fell out of the appropriation House bill today, and Representative David Joyce said he's not going to quit on the battle. So disappointing there. I think eventually it will happen. And what it will effectively do, it will allow federally chartered banks to bank the industry. Today, if you're a state chartered bank within a state where cannabis is legal, they can bank with you, and many of them do at higher expenses, higher fees, less competition. The debt market from the banks isn't there today. So we think, obviously with SAFER, it creates more debt capital where you can go out and get asset backed loans, you can get real estate loans, you can get cash flow loans, you can certainly get more access to the bond market with typical bond investors, which will lower the cost of capital. And then the other benefit there is to give other service holders, giving them confidence that they can cover the business. So whether it be other investment banks, whether it be insurance companies, so you can really get a full assortment of services that we don't today, and we certainly pay a higher rate on everything because we're cannabis. So it will allow you to do that, and then we're hopeful too that as a part of that, we would have a capital markets provision that would allow a U.S. domicile business to uplist to the NASDAQ or the New York Stock Exchange, which we're prohibited from today. We're on the OTCQX today, and we also are up on the NEO, the CBOE there, and so we're on those two exchanges. So you can trade in our stock, but certainly it would be more beneficial that we had more access to more investors and would have more liquidity in a higher exchange. So Safer still offers a ton of benefits, and we're hopeful we'll get that, but as we see with Congress, it's hard to get the two parties to agree to anything. So, we know what we control, we know what we try to influence from a lobbying perspective. So I'd be less optimistic on that, to be totally transparent. On the rescheduling piece, I'm very optimistic on. I think that will happen. I could be wrong, but I really believe that'll happen, and that'll have fundamental value creation opportunities for this industry. So it's a good time to invest.
Okay, well, we're running out of time, but let me sneak one more in here. From the audience, is Croctober still an issue in Q4 and early Q1 each year? I.e., is there an overabundance of cannabis inventory in that time of the year?
Yeah, great question. Seasonality, you have cyclicality, you have seasonality. That's certainly a part of the seasonal, the outdoor grows. They go to harvest. They they uh, they produce a lot more flower. They bring that to the market, creates surplus, and puts pressure on pricing. But we're seeing less of that as we're seeing the number of licenses on the growing side are contracting quite a bit in Colorado, as you've had a lot of these guys go out of business. So it'll have less extent or less impact this year.
Okay, that's all the time we have. Justin, great presentation. Really appreciate you taking the time. Looking forward to the Schwazze story continue to unfold as we go forward here. Thanks again. Appreciate it.
Great, Joe. Appreciate your time. Thank you for all those joining us. Thanks.